Okay, now you're probably wondering what this secret is that basically determines stock price movement. Now let me ask you a question. Have you ever wondered what moves the stock market? I mean, what really moves stock prices? You've probably been told it's the earnings that really move stocks. And that may be partially true. Or that it's the economy. And that's partially true as well. But the problem is those assumptions are just, well, unfortunately not accurate enough. The reason stocks often behave differently than the economy or earnings is that stock movements, the price movements, are actually based on earnings, on the earnings growth rate. That's where these movements come from, and it sort of gives you the aha moment. So even if a company is making more and more money, but at a slower rate, like, let's say, Apple. And here's the headlines, don't look now, but Apple's growth is slowing. The stock can really go down even as they're making record profits. Looking at Apple here, there was a high just a bit over 700, goes all the way down 400. So for stocks, it's the earnings growth rate. For commodities, it's the US dollar money supply expansion growth rate, weakening the dollar and moving up commodity prices. For gold, it's the weakening of the US dollar and the growth rate of physical gold buying. And you see a line up there, people waiting to buy gold, but that was actually at the gold peak, and then it started selling off because it was like a crescendo in buying, and the growth rate of the buying was not getting not as high as it had been in the past. The Canadian dollar is based on the price of oil. The Aussie dollar is based on the price of all the precious metals together. I used this theory on April 26th, 2012 when I wrote this, sell in May and go away. I just didn't think things would get better, so we went short using various inverse ETFs that make money when stocks drop. And now, in September 2013, it's about the growth rate of the US money supply influencing stocks, the dollar, commodity prices, and much more. But wait, what was that chart? Yeah, this chart. These are the charts I use to time our stock picks and get great gains for private members of Trader Review. These are called cloud charts. And here's the Russell, which is the 3 times bullish Russia index, breaking out from the cloud and surging. This moved up about 15 to 20% from the time it was recommended a few weeks ago. Here's the Nugget trade, which is 3 times gold, catching the rebound from below the cloud and using the cloud resistance to get out. Oh, and we also made money on the Aussie dollar using stock ticker FXA for the currency, moving up through the cloud, breaking through. A lot of this was done by the anticipation of continued Fed easing, which drives up stocks and gold at the same time, and using the cloud charting technique to time entry and exit points for private members of Trader Review. And in the members section of Trader Review, there are over 2 hours of charting videos teaching you how to use this technique, as well as my other techniques to bring in winning picks. You can learn entry and exit points for day trading, swing trading, and your retirement account, all in my videos. How would you feel if you had a secret weapon to time short and long-term trades? Don't be caught in a sell-off again. Know when to get out and sell for profits. Now, I just wanted to let you know that until this Sunday at midnight, I'm offering a 30% discount on Trader Review, where you get access to over 2 hours of videos of all my secrets. These are secrets that, in my opinion, literally time the market. It has literally taken me over 9 years to put these methodologies together, and I don't know how anyone trades profitably without them. You will also receive my model portfolio with updates daily right to your email inbox to copy right into your account with stops, objectives, and daily updates. All in table format with descriptions and charts of why we're getting into the trade. And we usually hold a pick 1 to 5 weeks depending how fast it moves. Because if we're up 20% in a week or two, we're probably getting out of that move because we timed it so perfectly. No sense waiting for a pullback. My specialty, however, is the entry point, so that we can maximize our risk to reward. And you'll often find my picks move in the right direction right away without having to wait for them to be profitable. I mean, who wants to hold a losing pick hoping it'll go up eventually? Become a private subscriber today, learn my methodologies, how I time the markets and all the different sectors, and get portfolio updates 5 days per week before the New York Open. Now, I just want to let you know that until this Sunday at midnight again, it's 30% off Trader Review. You get access to over 2 hours of training videos, all my secrets, and these are secrets that can literally time the market.